In the meantime, Macy is just reporting results a few moments ago. Let's get over to Courtney Reagan. She's got the numbers. Hey, Court.
Hi, good morning, Becky. Yeah, so Macy's earnings per share beating the street's estimates, reporting $1.23 adjusted compared to 31 cents estimated. Revenue stronger too, $5.44 billion compared to $5.2 billion. Comparable sales up 35.6%. That's owned plus licensed. That compares to 2020, better than 29.3% estimated. Comps grew 8.7% if you're comparing them to 2019. So a growth over 2 years as well as 1 year. This year's results do include this 200 basis point benefit from a friends and family sale that shifted into the third quarter from the fourth quarter in 2019. Macy's also raising revenue guidance to above consensus. Earnings guidance, though, is now in line with consensus. Its digital sales grew 19% over last year, 49% over 2019, a third of the sales in total coming online, down 5 percentage points from last year's third quarter, which makes sense with so much online shopping we were doing. 10 percentage points above, however, the third quarter in 2019. Gross margin, that was up 41%, up from 35.6% in the third quarter 2020 and up 100 basis points from the third quarter 2019. The retailer added 4.4 million new customers. That's a 28% increase over 2019. It repurchased $300 million of shares, repaid $1.7 billion in debt ahead of schedule. Remember, we paid attention to Macy's cash very closely for a long time. It's also announcing plans for a new digital curated marketplace platform to add to the products available online. Home, fragrances, jewelry, watches, sleepwear all continue to be strong categories. I spoke briefly to CEO Jeff Gennett, who spoke to the company's strong financial health and current investment in stores, digital, and people. He said Macy's is in a good inventory position. Inventory is up more than 19% from this same quarter last year, down about 15% from third quarter 2019. And he said, quote, "We've been through these inflationary times before, but we have a different level of pricing and analytics. We have a science for how we promote goods and how we mark down goods. Some pricing has changed," he acknowledged, and customers have accepted some and some they haven't. Overall, though, average unit retail was up. He said October was the strongest month of the quarter, and so far, November has started out pretty strong, too. Shares of Macy's higher by 9% in response. Becky, Andrew, Joe, back over to you.
Yeah, that is a big jump in the shares this morning, almost 9%, as you mentioned. Courtney, when you talk through the inventory levels, I mean, that's what's so interesting. For a company like Macy's, it's a little different than a Target or a Walmart or any of those stores that were open and kind of doing gangbusters a year ago. They talked about, I think, how Walmart was maybe inventory up about 13 or 11%, and maybe it was 17% at Target, if I'm getting my numbers right. But when you talk about the inventory numbers for Macy's versus a year ago, they were in a different position. It wasn't the same in terms of what they were dealing with. And I think it's interesting that you kind of pointed it back to the inventory compared to 2019's third quarter and it being down. Are they having troubles with the supply chain like everybody is? Are they able to deal with them as effectively as some of those big box retailers?
And so Jeff Gennett basically said, look, they've done a pretty good job mitigating where they can within the supply chain. Obviously, we know Macy's is going to be much more heavily skewed toward apparel than a Walmart. It's not as large, so it's not chartering its own ships, but it's actually done pretty well, I think, when you look at it. And those inventory numbers also have sort of this other cross current, Becky. If you remember, in 2020, early on, when the stores were mandated to close because they were non-essential, Macy's had to move really fast to figure out that inventory position. So canceling some orders for later in the year, perhaps, or just stopping them in their tracks from being produced altogether, trying to be careful, not knowing when stores were going to reopen. So you also have that comparison from last year, too, which makes a little bit more sense when you're seeing why the numbers are up so much, because I think they ended up with a little bit less inventory at the end of the year than originally planned last year because of the closures, but that turned out to be an okay thing, so they didn't get stuck with all of this extra inventory, right? And remember, they're still going through this store closing program, too, and so we could have some cross-current impacts there from just the total level of inventory.